Hey, welcome everybody. It's Chris Newberry with the brokerage, and we're just really excited today to talk to you about a topic that we're getting a lot of questions on. A lot of people are asking us about life settlements. They seem to have some hazy idea of what life settlements are. They know there's opportunity there. They know they can help their clients. They know there's an opportunity to make significant income, but that's about the extent of it. So we're going to sort of open up the hood and let you know a lot more about life settlements today. We're honored to be joined by one of our great resources in this marketplace, Ryan Thompson, founder of PolicyMarket. Welcome. Good to see you, Ryan, this morning.
How are you, Chris? And thanks for having me. And I think
Absolutely.
I think you hit the nail right on the head. There's a lot of buzz in the life insurance space right now about life settlements because let's face it, the the agents are getting older, their clients are getting older, and there's a couple reasons why they're thinking about it. One, to provide more options for their clients who may have change of needs, and also allows them to earn some money, commissions towards the end of their career. So let's talk a little bit about what a life settlement is.
That'd be great. Yeah, let's start from the top. So they hear the life settlement word, and so what is a life settlement?
So a life settlement, it's pretty simple. It's where a life insurance policy is sold to a third party investor. We take the policy and we bring it to market, sell to a third party investor for a cash payout for your client today. The client no longer has to pay any more premiums. And then the investor takes over those premiums and will receive the death benefit. So, what we're talking about is essentially an exit strategy for your client to get fair market value for what that policy is worth today.
So I would think the market's huge on this. Is it a huge opportunity?
Well, it is, and as clients become older, here's a statistic for you. $110 billion of death benefit every single year lapses without any value. And so that's the market right there, right? If you have a client that's thinking about surrendering their policy, can't afford to pay premiums, they should really be considering a life settlement, and you need to know about that.
So really what you're saying is a life insurance policy is an asset. It's an asset class for people.
Uh, totally. And you know, one of the things that we often tell our advisors is, financial advisors, accountants, they don't realize that a life insurance policy is many times one of the top three most valuable assets that your client has, but they really don't treat it that way. And understanding how a life insurance policy can be used later on in life, is of great value and can really open up some options for your clients' financial needs, as they get older.
So let's talk about those options a little bit. How does a life settlement help our clients?
Well, let's see. To put it real simply, it's an exit strategy for their life insurance. Life situations, they change. They may have taken out their policy when they're in their 30s, 40s, 50s, 60s, and now they're in their 70s, and their kids have grown up. They become financially independent, and perhaps they could better use that asset today rather than waiting till sometime in the future. So it's great to explore what kind of value that policy can have.
So what would be a good, maybe an ideal candidate for a life settlement?
So these are typically older clients, 70 to 75 and older, uh, change in health since they took out the policy. But Chris, we've sold policies for people in their 30s, which may have unfortunately had, a significant change in health. One of the things that we like to, tell our clients is just reach out to us. If you have an idea and you think that, there might be a fit, then reach out and we can give you guidance as to, if the client may be a candidate, what information we may need to find out more. But basically, another great class of candidates would be term conversions, right? Your clients reaching 65, 70, coming up on the expiring term period, and perhaps they don't want to keep the insurance, they don't want to pay that higher conversion period, but that conversion still has value, right? And so, we did a case for a gentleman a couple months back. He had $3 million of term insurance, and he was 69 years old and pushing up on his limit to when he could convert the policy. He had some health conditions, and he didn't need that $3 million of permanent insurance. So what we did was we converted $1 million of that term insurance, and he kept that $1 million. And then $2 million of that term insurance we converted and sold that, and then he used that money to fund the permanent insurance. So it was a great deal all around.
So that's great to know, because it's not an all or nothing deal. So you can't, if you don't need to convert or do a settlement the whole 3 million, like you said, you can do pieces of it. That's great.
And you can, and with that term conversion scenario, agents love it too, because oftentimes they get paid a commission on the conversion and also on the settlement.
That's awesome. That's a great deal. Well, so
let me add one more thing to that too. When you bring these ideas to your clients, they feel like they're getting serviced, and they probably have never heard of this as an option. But when you offer them, this value, you look like a hero.
Yeah. Oh, yeah. Because we get almost every day we get an agent calling in, and their client's 20-year term is about to go into year 21, and they just got that premium notice, and their heads are exploding. It's sometimes 6, 7, 8 times what they've been paying, and that's not reasonable for a whole lot of people, obviously.
But an investor may be willing to pay that money.
Go ahead.
Oh, so I should also say, when you start to think about looking at your book of business and these term conversions are coming up, get ahead of it. Because it does take some time, right? So we don't want to wait until there's a month out. We want to be 6 months thinking about this in the future. Give yourself some time to talk to your client, and it's much better off than rushing at the end and coming up against that date.
So how generally, Ryan, are these policies valued? How do we look at that?
Well, it's really there's a lot of factors, and of course it's the size of the policy, the size of the death benefit,
Yeah.
what it costs to keep the policy in force. So what would an investor have to pay? The investor is going to be paying the same way as you as a policy owner is going to be paying. So that premium payment has to be reasonable for the investor as well. And then of course the insured's health. That's a big factor most of the time. So how long is the investor going to be having to pay? How much are they going to be paying? And then what do they get at the end? And those 3 factors allow us to back into kind of a market value.
Got it.
There is one more factor though, and this is where we come in. Is what we do is we don't go to one buyer or one investor. We go out to the market and we position the policy for the agent, for your client, across a spectrum of buyers, and create a competitive bidding process. And what that does is allow us to leverage the different buyers and push that value up.
So you're doing the negotiation on behalf of our agents and their clients to get the best possible offer.
Yeah, that's right. We know what these policies should go for in the market. We've got actuaries on our team that have been in the space for 15 years, designed life insurance policies, the products, and have a great understanding of how to break the policies down the same way the investors do. And so we know what those policies are worth. And then from there, we have the competitive side of that.
So once you get everything you need to take it to market, what kind of time frame are you looking at here?
It's usually about a 3 to 8 week process. Depending on how quick we can gather the documents that we need, such as medical records, illustrations from the carriers. The medical records is a big one. In
Right.
some cases, we don't need medical records, and we can get into that a little bit more when we talk about how to look at the different types of policies that can be sold. But here's kind of how it works. We get an application signed, and that gives us the permission to go out and get medical records on behalf of your client. Then we gather those documents. And by the way, once that application is signed, that's the bulk of your work at the beginning of the process as an agent. So work with your client to get the application signed, and then we take it over from there. We'll go out.
So what you're meaning is that the agent's not going to have to get an in-force or get physician's records if needed. That's what the brokerage does in conjunction with you.
That's correct.
Okay.
If they have an illustration, great. We may review an illustration that you have and say, here's one that we need to best position the policy. A lot of times that's to age 100. But that's right, Chris. We work with the brokerage to get those documents, get the medical records. And so you as the agent get that application signed, and then we go through the rest of the process. So that's getting medical records. Then we go out and get what's called a life expectancy. And that's the underwriting that's done by a third party. We know how to identify the right life expectancy provider, depending on the impairments that your client may have. So as we spoke about earlier, the duration that an investor will have to pay for the policy is a factor. So life expectancy, we want that to be as low as possible. So finding that right life expectancy is really important to get the highest value. Now,
So if that, I mean, just thinking about this for a second, the if the life expectancy is only a few years, the offer probably will be better than if the life expectancy is 8 or 10 years, I guess. Is that accurate?
that's right.
Okay.
And you said that 8 to 10 year mark. That's typically what the range that a buyer is looking for. Outside of 10 years, it starts to get longer than they're looking to be in that investment. So that was a good example there.
One of the things that we do at the brokerage is we spend a lot of time on how agents approach people. How do they approach people for a new life sale, a final expense sale, what have you? How would an agent tee up a conversation about life settlements with their clients?
Well, that's a great question, Chris, and it's an important one. What I would say first and foremost is be proactive, right? Don't be reactionary. So start to think about your book of business and identify some of your older clients, your policies that are over $200,000, right? And think about where this may be a fit for your client's needs. Many times agents are pretty close with their clients and or kind of have an idea of what that their life situation is. And so it's a great conversation to have, create a reason to pick up the phone and call your clients. Annual reviews are great, right? Because it lets your client feel like you're looking out for their best interests, you're servicing your client. And it's also really good to know, what your client's life situation is, because it really may have changed from when you sold that policy, 5, 10, maybe even 20 or 30 years ago, right? And so now, you know, one of the things that you can think about as an agent as well is, if you have a potential candidate, before you have the conversation, reach out to the brokerage and, see if this may be a candidate. That way you have an idea before you go in and talk to your client, whether it would work or not. So
Yep.
now, once we've established that, this is a good candidate for a life settlement, a question that agents often deal with is, okay, well, what's my policy worth? Right?
Right.
That's what they want to know.
That's right. You're right.
And so the best way to respond is, well, let's find out. Explain to them that there are a couple factors. It's the cost of the insurance and their health. That this is a good time to ask them, if they've had any changes in health, since they took out their policy. You may know that, and then explain to them a little bit that, okay, we just need to get you to sign this application. It's a simple application, and that gets the process started. And that way we can get a really good idea of what the policy is worth. And then from there, if they think that's a something that they'd like to pursue, then we'll go through the process and really get that formal offer for them.
Gotcha. So walk me through the steps really quick, just so we have it down. So an agent's identified an opportunity. We have a pre-qualifier on the brokerage website that they can go through. We're notified if they do it electronically in our website, and we can sort of walk through with them. But they say, yep, this might be a great opportunity for a life settlement. What do they need to do?
Well, like we mentioned, that first thing is getting that application signed,
And that's not
right?
a long application. That's not like applying for a new insurance policy by any stretch, right?
No, it's basically gathering a list of their doctors. That's an important one, right? So that we can reach out and get the medical records, identifying any impairments that they may have had since they took out the policy. And that's really it. That's gets the ball rolling, and then we take it from there between the brokerage and us. We'll come
So
back to the agent with, an estimate, an offer, where however that shakes out, and then they can speak with their client about that.
So it's important to note that signing that application does not obligate that client to anything at this point. All that they're doing is they are allowing us to come in and grab the information in order to get offers for them. Is that right?
That's exactly right. It doesn't cost your client anything. There's no obligation. We take on all the cost of going through the process, and they get to decide whether this is the right fit for them.
And then when they decide, what happens then? What goes on to get it done?
Okay, that's where the agent comes back in typically, and there's a set of closing documents that are then signed. Right, their offers accepted, closing documents are created, and that's a contract between the buyer and the seller.
Okay.
It's very similar, Chris, to selling a house, where you have your closing and there's a packet of documents that need to be signed. And, once that's done, then there's a little bit of due diligence there. And then from there, the buyer then funds escrow, so the amount that the the offer is for, and they put in a change of ownership to the insurance carrier. Once that's completed, the funds are released from escrow to the client.
So that's I would imagine the two when you say 8 weeks or so, that is a lot of it is ordering APSs, getting an insurance company to work through that change of ownership, which, you know, as you know, with insurance companies, things do not always go the fastest. So it happens eventually.
Doctors and insurance companies, right?
Right. Exactly
Those are
right.
the biggest pieces of it. And we do take a little bit of time to create that competitive atmosphere for the policy as well. But all in all, it depends really mainly on the doctors and the insurance companies, like you mentioned.
Okay. So and then I know that our producers are doing great things for their clients in this, but as you mentioned, at some point they might want to be compensated for the work they're doing. So you mentioned if it's a term policy and it's in its convertibility period, they can certainly work on that conversion opportunity and get paid on the conversion, which can be significant compensation. Tell us a little bit in general terms what the compensation looks like for a producer on this.
A life settlement is a great opportunity for producers to earn commissions. And really, it's about providing value add to your client, right? And we've paid commissions from anywhere from 5,000 upwards to 100, 200,000 to agents. That's right, $200,000 to agents. Those are big cases, of course, right? Big policies, but it's really about how much value above cash surrender is delivered. And this is an approximation. Of course, all cases are a bit different. There's nothing that's set in stone. But we kind of like to look at it, back of the napkin, to get an idea around the 80-20 rule. So if there's a let's just say there's a gross offer of $100,000 to make it easy, right? We say that 80% of that offer should go to the client, and then 20% should be go as commission, and that's split between us and the agent and the brokerage.
Got it. Got it.
And
Okay.
now on policies that are a lot larger, maybe that 20% doesn't hold up because it may be too much commission. If the policy's smaller, it might have to be a little bit higher to make it work for everyone and cover costs. But that's a discussion. That's a good rule of thumb, but it's also a discussion that we have with our agents, and the agents also have a kind of a good feeling of what the deal would bear. But that's a good guidance.
So, are there any special? Is there a special license that agents have to have in order to do life settlements?
So the agents do need to be licensed in the state. It is a state by state basis.
Okay.
There are cases where there's general agents and general agencies like the brokerage where they hold the license and they're able to do this work on behalf of their agents. State by state, some states, it's about getting on the website, the state insurance website, and paying a $25 fee. But that's something that you can likely work with your agents on.
Right. Yeah, I got the certification last year, and it was. You're right. The state wants their money. Once they get their money, they issue it. And again, you're dealing. States are just a little bit behind doctors and insurance companies as far as a turnaround time. So it takes a more time than it should probably. So that's awesome.
And with licensing, the agent needs to be licensed to get commission paid, but we can have these conversations and work through that licensing
Yep.
process as we get a little bit further down the road.
So when the client gets their check, that the transaction's done, the money's released from escrow, your client gets paid for selling that policy. Is the agent compensation right behind it, or is it paid at about the same time?
The That's a great question. There's a 15-day, it is state by state, but
Okay.
typically there's a 15-day wait period that your client is able to turn around that transaction, right? So
Sort
there's
of
a
like a
15,
free look period.
like a free look period,
Okay,
exactly. And so once that 15 days is up, then that's when the commissions to the agent get paid out.
awesome. That sounds awesome. Is there any policies, just types of policies that we want to check on that are particularly good for this, or anything that you might suggest?
Yeah, so that's a great question. Really, the best policies are universal life and guaranteed universal life. So permanent insurance, right?
Okay.
And we want the policy to be able to be enforced through age 100. You know, investors, they really want to see a policy over $200,000 because that's makes it worthwhile for them. That's kind of the low bar. We have sold policies as low as $50,000, but that's less palatable.
Right. But we're
Okay,
not going to walk away from any
we're
opportunities.
not going to walk away, right? So just
Yeah.
bring us the opportunities, and then we can find a buyer to fit, right? So we're looking for universal life. Now, one neat thing about guaranteed universal life is we can provide offers without even going out for medicals. It's a little bit different because there is a guarantee there, and this is a great option for your clients, even if they're healthy. So different than just the regular universal life. If there is a guarantee, we have funds that will buy these policies without going out for medicals, which can make it much shorter, and they can be a bit younger and healthier. So that would look like maybe 70 years and above, if it's and they can be healthy as well. So that's another thing to think about, those guaranteed policies, right?
Got it.
And then, as we mentioned earlier, the term policies, it would have to be converted into permanent. But here's the thing, Chris, is that each one of these cases is unique. And I'm giving some general guidelines, but if there is a 40-year-old that has a significant change in health, and maybe they have a term policy and their life expectancy is only a couple years, it's out of the conversion period, but we can still go off the ART rates, right? So that would be not as common, but it happens. So if you have an idea, you think there might be a candidate, it's best just to reach out, and we can give you that guidance to say, hey, this actually could work for your client.
Yeah, that's a great point. Just give us a call, and we can just walk through scenarios and bat it around with our producers if we'd like to, because it's just we had one that the client actually really couldn't function, but he did have a spouse with a power of attorney, and they can look at that. It's not too late, even if they can't transact the business. And we had one that was actually a business owned policy, not a personally owned, a business owned, but the business, the man that in question had retired and left the firm, and they had a policy they were just going to lapse, but they don't necessarily need to lapse it. There may be an opportunity to sell that policy, so you just never know.
Chris, that's a great example because that happens all the time where there's a key man insurance company gets sold. A lot of times those are also bigger policies, right?
Yeah.
And now the company is holding this asset that they don't necessarily need anymore, but there's still value there.
Yeah.
And there's value to your client, and there's sure an opportunity to make some money.
So we do as you know, a tremendous amount of Medicare business, and one of the bane of our Medicare existence is the plethora of commercials that you see with some C-level star or former athlete that's pitching a call center opportunity. I, and it was brought up to me. There's actually commercials out there for life settlements. I think it's a little cartoon or something that they're doing, but it's, I mean, the temptation is great, for somebody just to call an 800 number. Remind us again why they don't want to call that 800 number.
Well,
Call us instead.
Those those commercials are funny, and they do target the older demographic. And the reason that you wouldn't want to go direct by calling one of those numbers is you don't know what that policy is worth. And the buyer, certainly, it's not in their best interest to tell you what that policy is really worth. So
Right.
by coming to the brokerage, by coming to us, we know this marketplace, and we can get a higher offer inclusive of those commissions than you would get calling that number directly. So that means that, you as the producer gets paid, your client gets more money, and also, the client is hands off at that point. They sign the application, we take on all the work.
That is very fair. That sounds great. As we wrap up, is there any final thoughts that you've got, Ryan, that we need to know?
I think that, be proactive. This is a great space for agents, as they may be getting towards the end of their career. They've built up this book of business over 10, 20, 40 years. Their clients are older. Now this is a way to ring the bell again, and also provide a great service to your clients, and reach out to your clients, talk to them. The amount of times that we've seen producers just reach out and have a conversation, and it brings a deal when they thought, this probably isn't a good fit for my client, but the client may really need to leverage the asset, and picking up the phone, the timing's right.
Exactly. Ryan, this is great information. Thank you so much for your time on this and your expertise. The call out on this, the action item would be, if you've got an opportunity. I know we can't get into specifics today, but if you've got somebody that you're thinking about that's got a policy, give the life team at the brokerage a call. We would love to chat with you about it and see what we can do to help you out a little bit. Ryan is available as a resource as well if you want to talk to him. He's got that Yankee accent, which is different from mine, obviously. So you can just choose your what you want to do with at this point. But Ryan, again, thank you so much for your time. We'll have at the end here, we'll have the resource from our website to show you the pre-qualifier. But please give us a call. Thanks a bunch. Have a great day.
Thanks, Chris.